So I'm going to be talking long strategy in this video. This has been a focus recently, and I'm just going to get more specific about developing a strategy here. Quick summary. I like my short strategy for crypto a lot more than my long strategy. Not only do I have more robust backtesting for a higher frequency strategy, but I'm also executing it excellently. I don't feel any FOMO. I haven't traded it perfectly, but pretty close to perfect. No emotional errors. On the other hand, my long strategy, I've got just less backtesting. I experience more FOMO, find myself chasing price more, have a litany of problems here. So, and if I look at the data over the past couple months, the shorts have been very profitable, high win percentage, easy. The longs have been unprofitable, sub 50% win percentage with some hefty losses. So I know that it's been my focus, but I need to think about it more. So I always like to start with the top-down concept, right? Me personally, for trading, technical analysis isn't enough. I want like a concept. So I do have a back-tested system which looks back hundreds of years on gold, the stock market, and the past 10-15 years on crypto assets. However, it's based on these assets continuing to go up over time. And I'm starting to believe that crypto assets may not do that. Why? Well, cryptocurrency is not like a stock, right? It's not a voucher of a business, right? And businesses grow over time, the economy grows, the winners grow. Crypto is closer to Forex, right? Agree? It's a currency, right? You have a cryptocurrency, you have a foreign currency, right? So you don't really tend to invest in foreign currencies. Typically, trend following doesn't work as well there. It's more mean reversion strategies. This is a way of saying that what's happened over the last 10 years in crypto, I don't expect to continue. Even for Bitcoin, I see it going higher for sure, but I don't see it being, it was reflexive with insane growth as it was. It's already at $1 trillion asset class, right? It doesn't need to go to 10 trillion, 100 trillion. I mean, it can eventually, but yeah, it's the size of Apple almost, or like Meta, Google, right? It's in the realm of these things. It doesn't need to be way bigger than them, I don't think. It doesn't need to be bigger than gold. And we see even something like ETH. ETH looks like it's dying off, right? It looks like it's dying. So we need a strategy more than just investing, right? Investing in crypto is not really working. We'll get XRP, investing in XRP. Now, if you bought the very bottom and you sold at the top, yeah, that works. That worked. But it really mattered which assets you picked. So asset selection matters. I care, about what looks the strongest, and that's Bitcoin, and I care about what also is strong and has a reason that I believe in, which would be not just Bitcoin, but ETH and, not ETH, but BNB and Solana. So we have, I don't want to stop at longs. No need, just go home. So we have Bitcoin, BNB, Solana as possible longs. And based on that thesis, it's possible, hey, if I'm going to trade longs, I should be looking at the indices, gold, or individual stocks, and not inside of crypto. And that's maybe true. There's not a lot of crypto assets that I'm like, I want to really be an investor in this thing's future. So That said, that's an idea I'm having is maybe I'm short only cryptocurrencies and then I'm going to be long in other asset classes. But I want to have long only strategies within crypto. So one of my ideas is, well, a good time to buy is when a huge amount of longs are liquidated on a massive flush. And partially it's like, okay, market makers targeted them, whatever, but it's like if all the leverage longs get flushed out, it takes a lot of the danger out of downside of the market. It's just hard to push the market lower. It can still go lower, of course, but it's hard to go lower sharply when everything's been wiped. All the open interest has been wiped out, right? So, given that, one of the strategies that I have, and I know this works, the problem is it works pretty rarely, but when Bitcoin, the funding goes negative because all the longs got stopped and there's more shorts than longs, that's a great time to open a long. Or to be long, potentially. Doesn't always work, but that's one. But I have this concept, okay, you can look at liquidation heat maps. One of them is just to put your limit orders right where the estimated liquidations are and wait for price to come to those levels. We could talk about stop and TP. I think you want to hold longs longer than you want to hold shorts, but you can just kind of wait for price to even bounce a little bit, maybe. Fixed TP, fixed stop loss, I don't know. But another concept that I'm having is, okay, well, if open interest, if Bitcoin is down X% in 24 hours, then it triggers a long. Say open interest is down. Open interest is the sum of perpetual futures traders. It's the sum of leverage positions. If open interest is down, say 3% in 24 hours, then you just open a long because it's something like that. Some of these, they need to get back tested. I'm going to forward these ideas to the quant that I work with and see if he can get me some back testing on it. But for now, yeah, I like the idea of not buying breakouts, not playing momentum, but really trying to wait for massive major liquidations and go heavy. So yeah, that's my concept for trading crypto longs right now. And specifically that looks like waiting for negative funding events on Bitcoin and doing a study of what happens when open interest dumps heavily in a day, and continue putting limit orders in areas of massive estimated liquidation. So that's the plan for now. And then also, like I was saying, considering shifting my long risk from crypto assets in general to either gold or the stock market. So those are some ideas. Appreciate y'all. Let me know what y'all think. Much love, and talk to y'all soon. Peace.